Welcome back to Market Call. Michael Decter has arrived here. He is CEO and Chief Investment Officer at LDIC Inc., and he's taking your questions on North American large caps. Michael, welcome.
Thank you. Nice to be here.
I'm glad you're here. Let's start
It's a little bit of an Uber issue.
Oh, there are issues all over the place with the storm that we had.
I'll be writing Bill Ackman to say, maybe you're not.
You've got a problem. Exactly.
You've got a problem.
Okay, let's get to your past picks because we do want to get some colors in as well today.
Okay.
So we'll take a look at what your picks were for October 3rd, 2023. We'll start off with Sun Life Financial, LSF on the TSX. Then at 64.39, now at 78.06. That's a 21% return or a total of 28%. So it did pretty well.
It did well, and it's had a little turbulence lately after its earnings missed, but we still think it's solid. And, well, the market is punishing missed earnings very harshly these days, and we think it's not a good time to sell. So it's we're hanging in with it, and we think it'll get back to where it was.
Yeah, 78.49 right now, but you think it will come back even higher?
Yeah.
Okay. Let's get to Surge Energy, which is out of, I guess, Saskatchewan, maybe Alberta. It was at 8.69 in October of 2023. Now it's gone down to 5.53. What happened there?
Well, we sold it higher up. What's happened is there's no investment money coming into the oil patch because the government of Canada is perceived internationally as being essentially hostile to the oil and gas industry. And so there are no buyers. So Surge is an enormously well-run company, drilling great wells, pays a great dividend, buys back stock, and its stock price has gone down. And it really needs a change in national energy policy, which may or may not come after the next election. Even
with Donald Trump saying he loves coal, he loves oil and gas, Canadian stocks are not seeing a bump from that?
Well, not until international investors feel comfortable investing in Canada, in oil and gas. And right now they don't.
Okay. Yeah. Let's go to Berkshire Hathway because that was your other past pick. Sitting at US $343 when you picked it. Then at $482.42. Which is where we have it now, and a return of 41%. So that's huge.
Well, nothing like a ride with Warren Buffett.
Exactly, yes.
And he's some people think he's entirely in cash, but he isn't. He has $300 billion of cash, but he still owns some major positions. And I think that it's great to be able to ride along with one of the greatest investors of all time. And it's a nice hedge because it's got some cash. So if David Rosenberg's right and we're near the cliff, then Brookfield will hold up pretty well. And as he usually does, Warren Buffett will go in and buy some things after there's a dip. We think more a dip than a crash, but.
Do you feel we're at a cliff then?
No, I don't. I think, we're pricey, and that's why the earnings misses are punished so hard. But actually, the overall earnings season was quite positive, and I think there are some market-friendly reforms in both countries. So the federal government in Canada backed off their inclusion rate change on capital gains, which was a sort of first sign. And I think the two contenders for the Prime Minister's job, Mark Carney and Pierre Poilievre, are both more business and market friendly than the fellow they'll be replacing.
Yeah, a little bit more savvy.
Savvy and also just more focused on business.
Got it. All right, we're going to be taking a quick break, but we're back with Michael Decter after the break, CEO, Chief Investment Officer at LDIC Inc. He's going to take your questions on North American large caps. We're back in a moment.